The US-China trade war is escalating very quickly, things are getting worse, and please don't hate me, but I'm kinda happy. Let's get into this. What's up everyone, my name is Ale. Welcome back to my world of stocks. So let's not waste any time. I'm sure you guys looked at your portfolio today and you saw nothing but red. So let's just go ahead and take a look at what happened and then we'll kind of go from there. By the way, I'm recording this on Friday night, so when I say things like today, I'm talking about Friday, but this video will probably be uploaded on Saturday morning, so just kind of keep that in mind. Okay, so like I said earlier, stocks took a very big hit today with the Dow and the S&P 500 both dropping by over 2%, while the tech-heavy Nasdaq took the worst of it, dropping by about 3% today. Some popular stocks that got hammered today include Apple dropping by over 4%, Facebook down over 2%, Google over 3%. Some semi stocks like AMD is down huge at over 7%, which is a stock that I recently sold, but I still watch them very closely because I think they have a ton of growth potential. I love what they're doing in the data center market. I love what they're doing with their new CPUs and GPUs competing against Intel and Nvidia. I have a lot of high hopes for AMD. I'm not a shareholder right now, but if this stock was to drop a considerably larger amount, I would definitely, be considering that one. Anyway, AMD does also have a lot of exposure to China, which is a major headwind, but that's also a big headwind for other semi stocks that dropped today as well. Like for example, Cirrus Logic also dropped by over 3.5% today. I feel like that one should have probably dropped a little bit more considering how reliant they are on Apple, but in any case, some of my personal biggest stocks got hit today too. Like my biggest stock is Microsoft. That one dropped by over 3% today. And if that one was to drop to around 120 or less, I would definitely be interested in adding to my position. But also Amazon got hit today. It's my second biggest stock, dropping to the $1,700 range. And if they were to drop to the $1,500 or less, that's another one that I would definitely love to buy more of. And of course, my Chinese stocks took a very big hit today as well, like Tencent and Alibaba, and also NIO, but NIO is always down, so what's new with that one? When looking at Alibaba, though, that one dropped by over 4%, and that's a stock that I already think is very attractive, even at these levels. Same thing with Tencent, so I would love to see them drop even more. I would love to buy some more of those stocks. And then I'd also love to buy some new stocks, like for example, Visa, which I recently talked about on the channel, and the more that I research Visa, the more that I fall in love with them, but they rarely ever move around much. So I'm like always hoping that they go down, or I'm hoping that the market drags them down. But today they dropped by pretty close to 3%. So that's another one that I would love to see the market just drag that one down a lot lower, get it to a more attractive level, and then I would love to be buying that stock. In any case, the reasons for the drop mostly have to do with China announcing that they will place new tariffs on $75 billion worth of US goods, including automobiles. So that would really hurt companies like Ford and Tesla, although I'm not that worried about Tesla because they will have their new China Gigafactory pumping out cars soon, and that should offer some protection to those tariffs. But even still, they slumped by almost 5%, and they're also approaching some very attractive levels. If they were to drop to below like $200, I would definitely be interested in adding more Tesla. By the way, I'm working on a Tesla video right now. It's a pretty fun one, so make sure you guys keep an eye out for that one. I might post that video on Sunday, I think. In any case, the tariffs should range between 5 and 10% and be implemented in 2 batches starting on September 1st and then again on December 15th. That also comes off of a speech from the Fed where investors and traders were hoping that an aggressive plan to continue cutting rates would be given, but instead the Fed basically said that they're adjusting when necessary and that they will continue to monitor the trade war and the macroeconomics of the country and also the global economy as well. I personally think that they will continue to cut rates given that the trade war and the global macroeconomic concerns continue to get bigger. We're also seeing big countries headed into recession, so there's a lot of concerns out there, but it looks like President Trump wanted to see a more aggressive plan to cut rates rather than being more conservative about it or more like data dependent. In fact, before the Fed speech, Trump tweeted, "Now the Fed can show their stuff." But soon after the speech, Trump tweeted again, this time more like in frustration, saying, as usual, the Fed did nothing. And he noted that he will work to have the US do great, but his only question is, who is our bigger enemy, Jay Powell or Chairman Xi, which is obviously the president of China. So he's kind of like comparing the Fed chair to the president of China, and that's obviously a very negative comparison. So the markets really hated that. And then soon after, Trump tweeted about the tariffs from China, saying that our country has lost trillions of dollars over many years, and they've stolen IP and want to continue doing so. He also added that we don't need China and would be better off without them, so he is ordering American companies to stop building in China and bring their companies and factories back to the United States. And at this point, I had actually finished recording my video, but I had to go back and re-record everything because later in the day, Trump tweeted about the trade war again, this time adding that he will now increase the 25% tariffs on $250 billion worth of goods to 30% in October and increase the $300 billion worth of goods taxed at 10 to 15% starting next month. So again, there's a lot of like uncertainty that is entering the market because all of this stuff, who knows where the trade war goes. It gets worse, gets better, always up and down, and the market hates this, and that's why the market's really tanked today. Needless to say, the trade war is definitely escalating very quickly, and I have to be very careful with what I say next because this is not a political channel, and I'm not here to alienate half of you by saying that this president is either smart or dumb. I know a lot of people like him, I know a lot of people hate him. That's not my job. But in my personal opinion, I think that Trump is doing this for two primary reasons. And one is to add pressure to China, who has a slowing down economy, who is seeing companies leave, left and right. We're seeing multiple companies leaving China. And they also have protests going on in Hong Kong. So while they do have a communist party leading the country, who you could probably argue can wait out President Trump, who probably wants to wait out Trump and hope that a more China-friendly politician comes into office and then they get a better deal for their country. At the end of the day, there's still a lot of pressure being put on China and on the ruling Communist Party. And I think Trump sees that, and I think that's why he wants to try to add pressure right now. And I think that's why he's so aggressive and they kind of play chicken. You normally wouldn't see this kind of behavior from a president, but again, Trump is not your typical president. And whether he is, how can I put this? Again, I got to be careful with what I say, but whether what he's doing is right or wrong, in his mind, he thinks of himself as a master negotiator, right? You might agree with that. You might completely disagree with that, but in his mind, that's kind of how he sees himself. So he's going to make some drastic moves because he sees this as kind of like a business transaction. And in the business world, he's often been very aggressive like that. So that's kind of how he sees it. So he wants to add pressure to China right now because he feels that the US economy is very strong and he thinks that the Chinese economy is very weak, or is at least weakening. So he wants to add pressure now and get them to kind of fold and give him what he wants. And I think that's why he's sending out tweets saying things like US companies are now ordered to leave China, basically saying, you can't manufacture there. And at the end of the day, I don't think there's anything that the president can do in order to order these companies to just leave China. I don't really know what the process would be, to be honest, but I'm pretty sure that he can't just order them to just up and leave. So I'm pretty sure nobody's really taking him seriously when he says that. But I think he's kind of saying it to get the point across to China that he's not messing around and that he's taking this very seriously. Again, whether that's the right strategy or the wrong strategy, that's not for me to say. I'm just telling you, this is what I think is going on in Trump's head. Now, that brings us to the second reason why I think Trump is doing this. And I think the second reason is because he really wants the Fed to cut rates. So in his mind, you got to think of it from Trump's point of view. He might be looking at this as a sort of win-win situation, because if he is more aggressive on China and say China folds and he actually gets the deal that he wants, then great, he got the deal that he wants with China. Now, if China does not fold and they retaliate, which is what we're seeing, and they just keep going back and forth, what is the Fed forced to do? The Fed is forced to cut rates because things are going to get very rough here in the States if if this continues to linger on and get worse and worse and worse, eventually, these tariffs are going to eventually take a toll on the consumer, at least in my opinion. So the Fed is going to eventually cut rates to kind of ease the economy. You're also seeing a lot of weakness internationally as well. So Trump really wants the Fed to cut rates. So he sees it as, okay, the Fed's not going to cut rates, fine. Then we're going to take on China head on and force the Fed to cut rates. So either way, again, I'm not saying it's right or wrong, but either way, in his mind, I think he sees it as a victory, kind of no matter what he does. Now, the way that I think a lot of this could backfire is that we're going into the next presidential election. I'm sure you guys have seen the headlines about this. Usually the president going into the election loses if we're in a recession, right? Or if we're kind of in a recession, we go into an election, usually that president loses because people lose faith in that president. So if we have a recession sometime in early 2020, mid 2020, going into the election, that could be very bad for Trump. So it all depends on what exactly happens next. And keep in mind, even when the Fed cuts rates, it takes a long time for that to really have an impact on the economy. So I think that's why Trump really wants the Fed to cut rates now before things get any worse. You kind of need the Fed to be proactive and to be cutting rates now. So again, kind of worst case scenario is that the Fed doesn't cut rates fast enough. The trade war escalates and it gets worse and worse and worse. And there's other issues out there too. So if any of those kind of macroeconomic issues get worse as well, we could absolutely see a recession in the United States. I don't know that we will have one. Again, I'm not a fortune teller. I know a lot of people pretend to be fortune tellers. None of us really know what's going to happen next. And to be honest, President Trump could send out a tweet next week and he could say something like, I just had a great conversation with President Xi, and then the markets, just roar back up because they think that a trade deal is about to get done. Maybe the Fed cuts rates and they see that as a bullish sign as well. So there's so many different factors to this. My only point is that I think that in the meantime, whether this gets resolved soon or years from now, which by the way, I'm not on the camp of the doomsayers who think that we will all of a sudden just never do business with China again. That's ridiculous. These are the two largest economies in the world. I think we absolutely have to do business with China. I think eventually a deal will have to get done. Both sides will have to learn how to play nice with each other. And eventually you get a deal where both sides give a little, both sides take a little, they both save some face, they go back to their home country, and they can both claim a small victory. That's my personal opinion. That's what I think will happen. The only thing is I have no idea when that'll happen. So in the meantime, I think that the market is going to be very, very volatile. And do we see a correction like what we saw at the end of last year? Maybe. I have no idea. Again, I'm not a fortune teller, but it's possible. And it looks like, the risk of that would be going up if things continue to get worse like they're escalating already. Now, do we get a recession or a market crash? That's also possible. Or do we just kind of have some dips here and there and then the market just roars back? That's also possible. All of this is possible, but my point is that there's going to be some great buying opportunities, whether that's some smaller dips here and there, whether that's a big correction like we saw at the end of last year, or whether it's a full-on market crash or we go into some kind of recession, remains to be seen. But I think that there's going to be opportunities. So for me personally, I've told you guys in previous videos that I have like 30 to 40% of my portfolio in cash, just because I've been kind of prepping for the next recession because I feel like we're just overdue. So I've been kind of saving up for some big crashes or even just like a correction. Even during a correction, I tap into those funds. So I definitely have a lot of cash on the sideline that I can use, that I can tap into, and I plan to do so. In fact, I'll be honest with you guys, today I nibbled a little bit at some stocks that I found very attractive, and I think I will continue to do so next week in very small amounts. I'm being very cautious here because, again, things are escalating very quickly. There's kind of no end in sight, at least here in kind of the short term from what we're looking at. So I will continue to nibble away very slowly, but if we go into a correction or a crash, I will definitely increase my buying. And look guys, I'm a long-term investor. I will buy all the way down. I've made so many videos saying how much of a long-term investor I am, yet I get so many comments from people that still talk to me like I'm some kind of short-term trader. I have no interest, or let me put it this way. I could not care less if the market was to go into a correction or a crash. That would not be a panic event for me. That would be a buying opportunity. So I really want the market to tank as much as possible. And if you're a long-term investor, you should have the same mindset. You should have been tracking the stocks that you really like. You should have done so much research on them that you know which price targets you're kind of comfortable with in terms of buying those stocks. And when they hit those targets, you should be actively buying those stocks. And again, that could be 10% lower, 20% lower, whatever is comfortable for you. I don't care if you just want a little dip or you want a full-on crash, whatever's comfortable for you based on your own research. But for me, I'm just saying that I'm definitely going to be buying all the way down, whatever this turns into. And at the moment, at the very least, I think this will be a lot of volatility. And as a long-term investor, I love volatility in the market because it usually means that I get great prices on great companies for the long term. Okay guys, I'm gonna stop here because I don't want to ramble on too much and I don't want to confuse you and say too much stuff. Obviously, there's a lot more to this than what we talked about in today's video, but this is just a short video to just kind of give you my quick thoughts on this because a lot of people were leaving comments asking me to talk about this. So anyway, that's just how I feel. Who cares what I think, guys? I would love to hear your thoughts and your opinions. Keep it clean, but I'd love to hear your thoughts. Leave them down below and I will try to respond to as many as I can. By the way, I'm working on more videos. I'll try to get some more out to you guys very soon, so keep an eye out for those. If you enjoyed the video, please consider hitting the like button. It really means a lot to me, and I'll catch you guys in the next one. Take care. Bye-bye.